News on 6 brought to you by Jim Norton's T-Town Chevrolet.
The Federal Reserve raised interest rates again earlier this month, and as Bankrate.com reports, it's the 8th straight meeting that they've done so. We want to know, should this change your strategy on how much money you put into a savings account now that things like money markets and certificates of deposit are actually becoming worthwhile? So Jake Dollarhide, co-founder of Longbow Asset Management, is here. Good morning, Jake.
Good morning.
We want to approach this from a lot of different angles. Let's talk about money markets. If you have a checking account or a savings account that bears interest, what is that market like right now?
You know, at the start of 2022, there were 27 money market funds that I had access to. They were all earning 0.01%.
Essentially,
they were all earning 0%. And now I have money market funds earning 4.6, 4.7%. And so there are so many negative impacts of inflation, but they're positive ones. Social Security bumps, you know, higher money market, higher savings rates. There are actually positives that come from inflation.
And I wanted to talk about, too, does this change then, so the savings market is good, does this change strategies on how to invest into like 401ks or stock market based, where now, Jake, these savings accounts kind of seem safer because you have that interest rate. Does it change the stock market strategy?
Yeah, I think it shifts more money into money market, safer investments, CDs, annuities in some cases. But when you have a year when the Nasdaq's down 33%, I think there's also logic to say what was down last year could be up this year. And so I think that's why you have an influx into tech stocks, consumer discretionary stocks, stocks that were down a lot in 2022. People are projecting they're going to be higher in 2023. So if you have a 401k plan, dollar cost average. You know, if there's a money market fund option, certainly that's an option now. Where it's getting 0%, now it may be closer to 5%, but put money in the aggressive growth strategy, put money in the value strategy and the growth strategy, and dollar cost average throughout the year, and overall you'll save for retirement.
And I was going to say, you know, with retirement savings, a lot of times you hear, you know, if your company has a matching fund, right? So if they match what you put into 401k, that hasn't changed, right? You still want to try to get that full company match if you have that.
Absolutely. If there's a 5% match, if they match up to 5%, put in 5% of your salary, because that's 5% free money without even investing. That's 100% return. You know, do that every single time. And even if you can't stomach risk whatsoever, find the most conservative option and put it in there, and therefore you'll sleep better at night.
Okay, well, we have another question too. I wanted to ask about real estate, because obviously the real estate market has just traditionally been very lucrative. I mean, in the last 15 years, right, you've been talking about the real estate market. We've gotten used to a certain way for real estate investors and people buying homes with mortgage.
Yeah. You know, ironically, the financial crisis of 2008 was caused by real estate speculation. But that also drove interest rates down to zero for 15 years. And it also created a new boom in real estate because people could invest in real estate for free, basically, at 0% at very low interest rates, 2-3% mortgage rates. Well, now with inflation, mortgage rates have gone to 6-7%, and the real estate market has really taken a hit. Let's think about why the Fed is doing what they're doing with inflation. They're trying to prevent what happened in the 70s. In the early 70s, inflation got to 12%. In 1980, it got to 14%. In last June, it got to 9.1%, and the Fed's continue to raise rates and getting it down to about low sixes now. When it gets to 4, I think we'll be good. Their mandate's 2, but the historical rate's 3 to 4. So.
Do you think the interest rates will still keep going up if the Fed will keep raising them?
I think the rates will, I think the rate of inflation will continue to come down. Yes, I think interest rates will go a little bit higher. Right now, the market started the year strong. But the last 3 weeks, it's gone down because investors are frightened that the Fed might not raise 1 or 2 more times. It might be 2 or 3 more times. It might not just be 25 basis points, but it might be 50. And the higher interest rates, the higher it is the cost of doing business, the worse it is for stock market investors and the like.
All right. Well, Jake Dollarhide with Longbow Asset Management, a lot to chew on here, but great advice and just a great analysis of what's happening right now with inflation and interest rates. We thank you for your time, Jake.
Absolutely.